A very warm welcome to this new session. My name is Ms. Prachivani, and today we are going to talk about sources of finance while planning for a food and beverage outlet. To start a business, one needs to have capital for the initial investment. So what do we mean by capital investment? This is the amount of money invested or required to be invested in an enterprise or undertaking. If we do not have enough capital investment, we need to have a very strong business proposal which can be presented to the investors for us to impress them. That is when they will invest in our project. Now, a little benefit here. If you are already running a business, then it can be a little easy to avail the loan facility or arrange for finance. Now, we need finance for various things. The first one is lease cost. The second is raw material cost. In our business, we are talking about food and beverage cost, electricity, fuel, salary for our employees, telephone, internet, bank charges, because today we are talking about technology in a big way, staff accommodation, housekeeping expenses, and others. So, how can we arrange finance for our business? First, we can take commercial bank loan, small business grants or loan. We can look at investors, partnerships, personal finance, venture capital, and franchise. Let's understand this one by one. Now, commercial bank loans are given for a short duration to meet the financial requirement. Few commercial bank loans are lease finance, term loans, and loan for commercial real estate. Now, the minute you approach a particular bank, they would have various schemes for commercial bank loans. The second source of finance we're talking about is small business loans. These are various government schemes which are launched in terms of promoting the entrepreneurship in India. The first one is SIDBI Make in India Soft Loan Fund for MSME. Now, what is MSME? Is micro, small, and medium enterprise, which is also known as SMILE. The second one, which is pretty famous right now, is Pradhan Mantri Mudra Yojana. This is available from various banks. The third one is the credit guarantee scheme is for MSMEs. The fourth one is Stand Up India scheme, and we have National Small Industries Corporation subsidy schemes. I have given links for all these loans in the next slide. The next source of finance is partnership. It is a very good way of raising capital as long as the partner understands the risk which is involved in the business. Having a partner helps as it shares the risk and responsibility. And obviously, the strength which are there from your partner are invested. So he can guide you whenever you need a guidance. It's always advisable to have terms laid down on the paper. The next source is investors. With the help of good networking, we can attract investors who can invest in our project. They mostly seek profit or the equity in the business. Now, we have venture capital. Here, well-established restaurant owners can look at venture capital firms to invest. Now, these firms invest when they see expansion in the business or in the project. This indeed needs a greater partnership and expects large return of investment. And something which is short term is personal finance. A personal loan can provide little support, but personal loan are at a very large interest rate. You can also look at having personal savings and credit cards, which can initially finance the project. Now, we have something which is called as franchise. Now, what is franchise? A franchising is an agreement in which the franchisor grants to the franchisee a license to use a particular commercial method which is developed by him. Now, this works best for the quick service restaurants. I'm sure you all know what quick service restaurants are. These are our fast food outlets. Now here we are talking about two parties. We are talking about a franchisor and we are talking about a franchisee. So let me explain this. A franchisor has a successful restaurant concept and he is willing to offer a training and any other required assistance to the franchisee. Now, what is franchisee going to do? He's going to adopt a successful concept from a franchisor and franchisee is going to contribute the capital to start the operations and efforts. And indeed, he needs to be motivated to run the business. Now, to an extent, the operation is going to be controlled by the franchisor. Why? Because he knows his product best and he has a successful concept with him. So he understands the operations better than a franchisee. Very famous examples who are brands who are in franchisee business are Domino's Pizza and McDonald's. So we are talking about two parties as I discussed, a franchisor who has a successful concept and a franchisee who's willing to invest money in the business and adopt the concept and expand it. Now, let's understand advantages to the franchisee. Let me give you an example. I'm sure you have heard about Domino's Pizza brand. Now, Domino's Pizza brand is not an Indian brand, but this was introduced in Indian market by Jubilant Foodworks Limited, which is based in Delhi. Okay, so what benefit did they get or are they getting right now as a franchisee? So as a franchisee, you get a proven package in terms of a brand product, which is already famous. So Domino's Pizza was already famous in United States when Jubilant Foodworks introduced them in Indian market. Then they had an opportunity to have an immediate entry into a business because they were introducing a famous brand, a very famous brand of a pizza. They got immediate entry into business because people already knew what kind of pizza they were going to have, or for that matter, they had they knew about the brand which was there in the United States market. They receive a support for evaluating the site. Now, a franchisor comes in between and he supports or he helps to the franchisee in terms of evaluating the site. They also give training for management and staff. Franchisee receives a regional and national promotional support. They also receive support in terms of setting up the outlet with the help of layout and shop fittings. Menus are given by franchisor to the franchisee because they're already tried and tasted. Also, they support with the SOPs, which are our standard operating procedures. And in this bargain, both the parties, franchisor and a franchisee, are building a very, very strong brand. Now let's understand what a franchisor is going to receive. A franchisor is going to expand business with someone else's investment capital because here the franchisee is putting money and franchisor is giving them everything ready-made in terms of SOPs and the menus and the promotional support, and they're going to expand the business. Greater market exposure. Domino's Pizza entered in India because obviously they knew that the market has that kind of potential. Less competition by expanding in various new markets. It achieves market penetration with speed. Enables to be the supplier for raw material or equipments because as I said, they're going to help you set up the entire store or the outlet. They give you support in terms of supplying the raw material because here standardization is very important and the equipments. It reduces the stress of finding a new site because that job is done by a franchisee. A contract is made in between two parties, which could be for a particular period or it can be for a long-term duration. It receives a franchisee fee, commission on turnover, and a percentage on promotions. Any one option can be opted in between both the parties. Now we have to remember one thing, that let's not get confused in between a chain and a franchise. Now here in a chain of restaurants, all outlets are owned by the main company. And when we're saying a franchisee, it means main company will give rights of selling their products to the potential investors. Example, McDonald's who operates both a chain and a franchisee. So here McDonald's have kept few outlets under their management and few are given as a franchise. Refer these links for more information. A quiz link is in the video description. Please go ahead and attempt the quiz. On that note, thank you and I will see you soon.